If you've earned any tips in 2025, then this video is for you. I'm going to break down the newly implemented no tax on tips rule. So for starters, this deduction is for those who are employees or self-employed individuals who work in an occupation that customarily and regularly receive tips. There are income limits in place, so in order to qualify for the full deduction, you need to make less than $150,000 filing single or $300,000 filing jointly. If you're making anything above those income limits, then the deduction will begin to phase out. It's also not completely tax-free, as you'll still be paying for Social Security and Medicare on those tips. So here's what the IRS defines as qualified tips. Tips must be paid voluntarily without any consequence in the event of non-payment. It cannot be subject to negotiation and must be determined by the payer. It cannot be part of a service fee and not automatically added onto a check, similar to a percentage for large parties. And most importantly, it must be a qualified job according to the Treasury Department and the IRS. Here are the roughly 70 jobs classified as customarily and regularly receiving tips. And just remember, the deduction is taken when filing your taxes. It's an above the line adjustment. You can take it if you're taking the standard deduction, and you can also stack it with the no tax on OT. Your employer is actually the one responsible for furnishing some sort of document that states the amount of tips received, whether it's on your W-2 or through a 1099. If you'd like to figure out the impact on your taxes, take your total gross income and then subtract your qualified tips from it. This is your adjusted gross income. If you then also subtract your standard deduction from the adjusted gross income, you'll then arrive at your taxable income.